Okay, so this is the big one. This is the financial video that could genuinely change your life. This is the information you do not learn at school and something that people don't naturally think about when it comes to finances. I'm going to tell you how wealthy people get rich, stay wealthy. In my opinion, this will be the most important financial lesson that people can learn. Once you get your head around this concept, finance and money will make much more sense to you. My name is Gareth. Welcome to One Man's Money Mission. Let's get stuck in. So today I'm going to take you through two different scenarios. Scenario one, how broke people spend their money and the consequences of how they spend their money. Scenario two will be how wealthy people spend their money and the consequences of what happens later down the line when they spend their money. So do you remember James, Oliver and Mike from a few weeks ago? Well, this is where we delve deeper into how those characters behave. If you don't remember or haven't seen that particular episode, then it might be worth going back to watch just so you get the gist of what we're talking about at a higher level. Either way, it doesn't really matter. Hopefully, I'll explain this in a way that everybody can understand regardless. So let's start with scenario one, how broke people spend money. This applies to people no matter what they earn, whether they earn a little bit each month or whether they earn a lot each month. It's for all those people that spend their money each month, so they are always broke at the end of the month. This accounts for a lot of people. We're going to start with scenario one. Please don't pick apart the numbers. The numbers are simplified so I can easily explain them. Try and concentrate more on the concept that I am explaining, on the strategy that I am explaining, okay? So scenario one, a broke person has just received £50,000 in their bank account. So what's the first thing that they do? They start thinking about spending the money. They start thinking about a new car, they start thinking about new clothes, they start thinking about new holidays. You know how it is. It's a totally normal thing to do though. However, I'm going to explain how this is a bad thing to do, but for now, let's go with it. Let's see how it pans out. Take note that I've highlighted the word spend. This is important because on the next scenario, we won't be spending, we'll be investing, but let's carry on. Soon it'll make much more sense. So let's use buying a nice new car as an example. So you spend 50,000 on your new car. Now what do you own? Pretty easy question. You own a car, which for argument's sake is worth 50,000. Let's be honest, as soon as you drive it off the forecourt, it's lost money, but to keep it simple, let's for now just say it's still worth 50,000, okay? So you got a car worth 50,000 and your 50,000 cash you had is gone. This scenario seems pretty logical so far, hopefully. What do we do with money? We buy things, but save that thought because later I'm going to tell you that this is the wrong way of doing things. All will become clear. So you've got your car, but let's have a look at what that might look like over the next 10 years. So 10 years have passed, and what do you think has happened to the value of our car? You guessed it, the car has depreciated in value. The car is secondhand because you've owned it for 10 years. It's got mileage on it, and maybe there's some minor, bodywork scratches and wear and tear on there. The usual stuff that brings a car's value down. What's more is that the more years that pass, the less the car will be worth. It's just constantly losing value over time. Currently, your £50,000 car is now worth £15,000. 10 years have passed. So you've got a net loss of £35,000. You're 35 grand out of pocket and you've got a car that's rapidly depreciating. Let's take that further. You've had to maintain the car over the last 10 years, which is all costing money. The warranty ran out, the car started breaking down. Each time you've had to take it to a garage, it's cost money every time. Let's call the cost of maintenance £5,000 over the entirety of those 10 years that have passed. I think that's a reasonable number. So to summarise everything we said, the car has depreciated by 35k, You've spent 5 grand maintaining it, which leaves us with a car that's now worth £10,000. So that was a pretty straightforward scenario. So keep all of that in mind and let's go on to scenario 2. This time we'll be looking at Mike. If you remember Mike is financially free. There's a reason for that and I'm about to explain how and why. So we know Mike is a wealth-minded person. Mike receives exactly the same £50,000. What's the first thing that Mike's going to do? Well, he's not going to spend. He's going to start thinking about investing the money. They don't want to spend the money, they want to invest it. That's important. This is a key decision and the main difference between a broke person and a wealthy person. Let's use property as an investment example. Other investments can be made, but for this scenario, we're just going to use property as an example. So Mike's decided that he's going to invest in property. And again, don't worry too much about the numbers. It's the thought process about how this works that matters, okay? So let's say our investor, Mike, decides to do a deal on 2 properties worth £100,000 each, okay? In the UK, last time I checked, you need to put down 25% deposit, so 25% of the property's value in order to get a buy-to-let mortgage. So Mike is spending £25,000 on each property as a down payment towards a £100,000 property to get his buy-to-let mortgage. Let's say that now the buy-to-lets have tenants living in them and they are each returning £500 per month profit as rental returns, okay? This will be a total of £1,000 per month return off of those 2 buy-to-lets. So here's an interesting question. What if our wealth-minded person also wanted a car like our broke person? Let's have a look. Well, what if this person leased a car with the profits from the buy-to-let? So let's take stock of the whole situation so far. This person still has money in houses. The houses are making money, plus they also have a car out of the deal. Plus, they also have £200 left over after paying the car lease. So they're making profit as well. Let me stress that point again. The person now has 2 profitable properties, has a car, and is making £200 a month income from exactly the same £50,000 that the broke person had. Let's fast forward 10 years. Firstly, what do you think has happened to the value of our houses? Well, in all likeliness, they've increased in value. Let's say they are now worth £120,000 each, okay? So each property's value has increased by £20,000, which we add this profit onto our original 25 invested, which gives us a total of £45,000 per property. 45,000 times 2 gives us a total of £90,000 worth of assets. So our 50 grand has turned into 90 grand. Let's remember, after our car lease, we also had £200 a month left over. So we take 10 years, we multiply that by 12 months in a year, which gives us 120 months worth of £200 payments. 120 months multiplied by 200 gives us a grand total of £24,000 saved in profit. Summarise, we started off with 50,000, which we invested in property. The property grew, each one grew by £20,000 for a total of £40,000 profit. We also make £24,000 in excess rental income after we paid our car lease, which gives us a grand total of £114,000 net worth. Plus, let's not forget, this person is still driving around in a new car because they leased their car. So unlike the broke person who has had the same car for all this time, which is now depreciated and continues to depreciate in value, this person has a new car for the same monthly cost equivalent as they've always paid over those 10 years. You've had scenario 1, you've had scenario 2. Let's do a final comparison. Both were given exactly the same money. They were both given 50,000. And here's what we end up with. Our person with a broke mindset had 35k depreciation loss on the car and spent £5,000 maintaining it. After all is said and done, they have a total of 10k worth of beaten up car that's still depreciating in value daily, and their net worth as a whole is still depreciating daily. Now we move on to scenario 2, the wealthy investor mindset. They took their 50k and invested it into property. Their property increased in value by a total of 40,000, and they made 24,000 in rental income. That's after they've paid out the money for the car lease. They still drive that new car, and in total they've got a net worth of 114,000. They will continue to make money, and their net worth is still appreciating. Now just stop and consider what I've just told you. Those two people received 50,000, and look at these different outcomes. I mean, it's almost unbelievable, isn't it? But this happens in society constantly. This is how people are living. This is how people are spending money. This is why people, maybe people like you, are broke all their life. So what do you think about that? Every time I think about that example, it actually blows my mind. It's crazy. And I stress, you don't have to invest in property. It could be a business. It could be stocks and shares. It could be anything. The point is, investing cash into assets is always going to outperform, or 99.9% of the time, over a long term, is always going to outperform spending cash outright. So I think my final comment on the matter would be, don't spend your cash directly on personal items. Use assets as a middleman. Buy assets, use the profits from the assets to buy personal items and goods. That's how the wealthy do it. Now you know how to do it. So I hope you've enjoyed today's presentation. I hope you've learned something. If you have, if you've enjoyed the video, please like, please subscribe. It helps the channel, it helps me.